Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So let's take a step back. One of the bottom lines that I wanted traders to be able to walk away with from this presentation is probably one of the same things that I want traders to walk away from this presentation with, whether you're an options trader looking at currencies or whether you're a currency trader looking on options, is that currency options or FX options give us the opportunity to diversify strategically. From the perspective of trading the news, which is inherently short-term, it has distinct advantages over trying to set up an elaborate conditional order process in the spot market, where we are very exposed to an extremely a risk that I think is too often underestimated, and that's the risk of a whipsaw. I think too often traders forget about the fact that they get whipsawed out a lot, but then their analysis turned out to be correct. What if every time they were whipped out, they could look at this from this perspective of piling up all their trades, and out of all the trades they got whipped out of or stopped out of, what were the trades that ultimately turned out to be right and they would have made some big profits versus those trades that turned out they were wrong and that stop loss really protected their portfolio? But what if they had been willing to risk just a little bit more and bought an option instead? How would those two net out? And I would wager that if you were to look at your own trading record as a news trader in the Forex, you might find that trading the options, although they might increase your costs a little bit, in the long run actually reduce your costs, because the likelihood of being whipped out begins to fall dramatically, because you have the ability to withstand that initial market volatility that generally happens as a news event hits the wire and begins to take off. So let me take a step back and answer any questions that have that anyone has. You should see your little questions icon in your WebEx panel. While you're typing this in, one thing that I always recommend is I can present the material like this from my perspective as as a trader and as somebody who's been on the other side of the business as well. So I've seen what traders do from the services side of the business as well. And one of the things I always recommend is that your own trading style is going to be obviously individual to accommodate your own risk tolerance, your trading objectives, your capital balance, et cetera. So I would say, if anything that you heard today seems interesting, but you weren't following it exactly, so you're okay, I'm kind of getting this, but I'm not sure how to do this, then paper trading is a great place to start. So for those of you who have been Forex traders, you probably did start out paper trading. It's just as easy to get involved in paper trading through an options broker as it was to start paper trading in the Forex with a Forex dealer. So I got a question here from Patrick that says, I'm a Forex trader. So congratulations, Patrick. That's great. And where's a good place to learn more about the options end of it? Okay, so if I can, let me make two suggestions. The one place that you can go is www.learningmarkets.com. We do trade examples every day. And you should know that we don't charge for them. So what happens is you get to see the real guts of how a trade works out. So you see the losers, you see the winners, you see how we deal with both ends of the spectrum. And I like that, because in my experience, practical education is an important component in addition to theoretical education. So, and I would say for really entry-level Forex traders, if you're looking for just to get started with a really simple course to introduce to you what is a call, what is a put, how do these things work, then what's the strike price, what is the premium and expiration date. So if you're struggling with some of those definitions, I would go to 888options.com. So it's 888 like a phone number, options.com. It's the OIC, which I think the ICE is actually a member of the Options Industry Council. Steve, you might want to correct me if I'm wrong, but it's an industry organization. Okay, so it's an industry organization, and they have some great, really basic level education to help you understand what's a call, what's a put. So when you are paper trading, you know where to start. But if you want to see live trades, so trades that are actually being entered and managed all the way through till the bitter end or the golden end, come to Learning Markets, because we have a trades tab and you can watch it right from the start all the way to the end. Sometimes that's helpful just to be able to see and watch it being done. You can copy it, in a paper trading account and see for yourself how it works. And I always find that the hands-on learning is really helpful. Okay, so let's see. So Harpal is asking for a book recommendation about news events. Correct me if I'm wrong, if I'm misreading your question. So you're looking for a book recommendation about trading news events. I don't know that I have one. I know that there's some out there, but and so this is going to be really self-serving answer. I wrote a book a couple of years ago called Profiting from Forex, and we had a chapter in there about news trading. But it's not as, it's kind of a survey of news trading. It's not probably as comprehensive as maybe you're looking for. I haven't seen anything come out that's really that great. And part of the reason why is that news is a moving target. What matters today in the news relative to the Forex probably won't be the same thing as next year. I remember back during the mid-2000s, the inflation announcements, that was where everything was. Everybody cared about the inflation announcements. Well, right now, everything is all about labor. They're always looking at the monthly labor reports. That's like the most important announcement. So it really varies, and the way in which those announcements affect the Forex will change. So it's a moving target and something you kind of have to just dig in and start observing on your own. I would keep like a trade journal or something like that. Watch the announcements given day and write down your observations. You're probably going to get a lot more out of it if you do it that way. So Mike's asking, how does the vertical spread compare with the straddle strangle when trading the news? Well, vertical spread is directional. So, this case example that I used here with EUU, the specific trade that I set up here, this is basically, traders would call this like a bull call spread. So I'm only going to make money if the market goes up, versus a straddle or a strangle could potentially make money if the market goes down or goes up. Now, the disadvantage is, of course, it's a lot more expensive because I'm buying two legs. So it would be, you could think about it that it would be twice as expensive as just buying the call option. Now, that's not necessarily bad. A lot of traders make that trade, especially when we're in a consolidation range and they're willing to sustain a little risk. But that's probably the biggest difference that you would find, Mike, is the vertical that I demonstrated. So you're asking for the difference between a vertical versus a straddle or a strangle. Well, the vertical is only going to be right if the market goes one direction. It's got to go up. So Bill, you're asking, oh, Bill, this is a great question. I am really glad this one came up. So Bill is asking, and I'm just going to read your question, Bill. Is there a good strategy, for instance, to go long in the spot market and cover with a put option in the options market? Does it make sense, or are the premiums so hefty in the options market that it doesn't make sense? So Bill is basically asking, does it make sense for me to buy a protective put against a long position in the Forex? So what if I bought the euro dollar? So I went long the euro dollar today, let's say. But at the same time, I bought a put on the euro dollar that was, of equivalent size. So maybe I got one mini lot in the Forex that I'm long, and I'm long one put in the spot market. So is the premium so large that it doesn't make sense? No. In fact, it makes a lot of sense. But what you just constructed was a call option.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.